Welcome to the New Leaf podcast for people turning over a new leaf in financial advice. This is episode 1, and I'm joined today by Kelsey Phillips from Arose Finance. We're diving into some topics today, one of which is how you start a business in financial services after being in a completely different career. In this case, Kelsey was a professional footballer.
And life kind of took me down the professional sports career route. I was pursuing a career in football for a long time. I was walking with my dad on holiday and I remember saying, what if I just set up my own mortgage firm?
Also interested to hear from someone who is truly in her own niche. In this case, Kelsey is a true specialist in development finance and bridging. So we're going to hear about that as well.
There are many brokers that kind of just have pockets, development finance, commercial finance, bridging.
But you had that idea to really go for that area of business first, even before you got started. I'm also going to hear from her some of the tactics that will make you as a mortgage broker successful in this field.
If you're going to gain any market share, you have to outwork other brokers. Succeed or fail. If you're going to fail quicker, iterate quicker.
So Kelsey's story is inspiring, and it's also a great example of how New Leaf have helped someone start their career in financial services. So to kick things off, Kelsey, could you tell us about the moment you decided to build your own financial advice firm?
Yeah, absolutely. So I think it's been, for me, a long time coming. To be an entrepreneur has always been an ambition of mine, even when I was very young, interviewing for the Young Apprentice, selling sweets in school. I think it's kind of in you or not. And life kind of took me down the professional sports career route. I was pursuing a career in football for a long time. And then I pivoted into trading. So stopped trading at Goldman Sachs, kind of find myself in my late 20s, loving what I was doing, but also kind of longing for more of an entrepreneurial journey. So those first kind of 5 years at Goldman were very formative. I felt like the next 5 years, maybe the trade wasn't quite the same. I wanted more time freedom. And so I literally just made the decision. I was walking with my dad on holiday and I remember saying, what if I just set up my own mortgage firm?
That's a massive transition. That's a bit of a difference for you then.
Well, yeah, I think the big decision with that was I had a real opportunity cost. So I was leaving, a role that I'd worked very hard for almost all my life in studies and negotiating my way in. To leave and start from scratch with no momentum was a big decision, but it felt like the right thing to do. So
yeah,
quit Goldman and set up Arose Finance.
And that's a big deal because, again, you were in financial services, obviously previously a footballer to that as well, which is pretty cool, but you weren't ever a business owner in financial services, and especially in mortgage advice. So very different type of career for you. And I do remember actually when we spoke on the phone, when you were interested, you found New Leaf, and you called us up, and you were interested in becoming an advisor. And I think you were on your way to see Arsenal play.
I was.
And I was also on my way to see Arsenal play that day.
I knew it was a match from that point.
But yeah, exactly, it was, isn't it? But again, like, what made you pivot into mortgages, and also why New Leaf? Why did you find us?
Yeah, so when I was trading, I worked on the synthetics products group team. So it was structured derivatives. And I had worked very, very hard at Goldman to try and build up a property portfolio. So I was fascinated by property. I knew that people were making money in property and I wanted to be closer to those kind of creative, structured conversations. So it was kind of structured finance, property, and that married into, I thought, kind of property finance, mortgage broking. There's one thing deciding you're going to set up a mortgage company. The other thing is, okay, how do I actually do that? I knew it would be FCA regulated. I knew there would be lots of barriers to entry. And a bit of research, New Leaf came up, particularly as like a stepping stones company that can help you navigate that journey.
Yeah, well known for that.
Well
helping
known.
New people into the industry, absolutely.
100%. Yeah. And it's been fantastic, kind of the guidance that you guys have given. But I remember calling you and you basically saying, well, you need to do your CeMAP. And I said, the hell's a CeMAP? CeMAP. Okay, go away. Googled it. Next day I bought kind of your digital textbook, and it's a 9 to 12 month long qualification. And I remember, right, I'm going to stay behind after work and study this exam. And I thought, first few days there, I said, I can't do this for 12 months. I was working till midnight, 1 a.m, back at my desk for 6 a.m. And so I just booked my exam for 2 weeks' time. And by the grace of God, passed it somehow, called you back. And I thought you said, you should call me back once you've passed it. And I said, well, somehow I have.
I think you must hold the record for passing that quickly. That showed a lot of grit for me. I was like, wow, this is a special person we have on our hands here.
Let's get it done.
But you mentioned about, your interest in property development, and obviously that's a big niche for you.
Yes.
And that's very rare to see someone who's coming into the industry new to actually do what you've done and to really take that leap of faith and go into something like development finance, bridging, and really solely pursue that. Most people probably sort of lay their foundations quite wide, so they'll end up doing lots of different products, and they'll find their way. But you had that idea to really go for that area of business first, even before you got started. How have you found that decision?
Best decision I made, I think. In truth, my view is that I think technology and AI will ultimately it solves for inefficiencies. And I think the problem set that residential mortgage brokers solve has to a large extent been quasi-automated. At a certain point in time, we will have, I'm sure, lenders more and more are coming direct to consumers. Yeah. I felt like even in terms of the return profile, that would be more interesting on the development finance side. With that said, it's a steep learning curve.
Well, it's funny because you say about technology, and it's a big driver for change in the industry generally. But on the commercial side of the business, as that you're in, it really hasn't caught up, has it?
No,
at all.
No,
it's still old school style.
Yeah, absolutely. Yeah. Well, as I've understood through kind of the years now in the industry, there are many brokers that kind of just have pockets: development finance, commercial finance, bridging, maybe some regulated bridging too, and they'll have 3 or 4 lenders that they'll just place with because they know the criteria of each of those. As opposed to like a true whole of market distribution where you know the nuances of 300 lines of criteria, for example. So it's quite complicated. As someone who's kind of embarking on that journey of, okay, how do we systematize the brokerage on the commercial side? It's complicated to do.
Were you surprised by that when you came into the industry and you found it was quite, not very technology heavy in this space in particular?
I think I was excited by it because I did spend some time on the regulated side. So I did start and I did residential mortgages. I started with nothing, no knowledge, no clients, no momentum. And so, it took a while to build the knowledge bank. And you only learn that when you have clients and live cases to do. So that started on the regulated side, which there are sourcing softwares.
Yeah.
On the commercial side, I quickly realised how nuanced it is. There is no set pricing. Everything's bespoke. You can structure things differently. So I think that's what's interesting to me about the industry is that, it isn't off-the-shelf solutions.
So in a way, is there a different skill set required in that you have to build relationships and know the BDMs, understand the lenders, what they're doing, but also there's that element that you have to write the deal yourself as well? Because you don't really do in regulated mortgages
100%.
anymore.
Yeah. I think that's what you can add more value through that negotiation and structuring. Yeah. Even things like in development finance, non-utilisation fees, or the way that interest is calculated, is it retained, rolled, monthly, daily calculated? All of that can compound very differently in terms of the cost to the client.
I love how the jargon just rolls off your tongue these days. Like a year in and you sound like you've been doing it for 20 years. It's amazing.
So, but it can make a big difference other than just the headline rates and the headline arrangement fee. And so your ability to add value and negotiate deals, I think, is effective for clients. So
obviously, new business relatively over a year now, but you must have some challenges at the start.
Yes.
How do you overcome them? What were the challenges?
Yeah, well, I think for everyone starting out, the biggest challenge, if you're starting genuinely from scratch, you haven't come from the industry, is momentum. So you're starting from absolutely nothing. Yeah. And so you kind of look yourself in the mirror at a certain point, you say, okay, what am I going to do today? Where do I even start? So I remember when I first started, I was like, okay, I'm going to put on my dress, put on my heels, and I'd made kind of an Excel sheet of in the surrounding area, every town, how many estate agencies there were, and in terms of highest return on time invested, okay, I'm going to drive to that town, then that town, then that town. I'm going to walk into doorstep every estate agency.
Wow.
So my first day of setting up Arose Finance, I walked into 54 estate agencies. 54.
You kidding me?
I know the number well because it was painful.
One day?
In one day, right?
That's insane.
And
in a good way, by the way.
Every single one of them said no. So
Wow.
what I was going in, I remember standing outside the first one. I was like, come on, Kelsey, you got to go in here and basically introduce yourself. You know, room full of people who all left their head when you go in. My name's Kelsey. I've got my own brokerage. And I was wondering, do you have a relationship with a mortgage broker? My thoughts were I could help them sell their houses. Like, let me help you sell more. And every single one of them, 53 of them said, no, we've already had a relationship. Or you can walk in, sometimes they have them in the office.
Oh, they hate you then, don't
and
they?
they hate you then, because then you're treading on people's toes, literally.
Yeah.
And so, but I remember kind of getting to the 19th or 20th and thinking, I'm not sure I've got the right tact here. Am I barking up the wrong tree here? Because all of them said no. So at that point, you can make the decision of either go home and change tacts. Maybe you should send emails or cold call, whatever it might be, to the introducers. And I decided, no, I'm going to go and buy myself lunch, and back out I go.
Wow.
And literally, as if you hear about it often, but literally the very last estate agency, Upminster High Street, I went in, and it was my worst pitch. I went in and I said, you know, started to introduce myself, and I could see in the back that
You're
there was...
tired at this point.
I'm
frazzled.
tired, but I could see there was someone in a glass box, a mortgage broker already. I said, what? Absolutely. I can already see. I don't want to tread on anyone's toes. He's like, no, what were you going to say? I said, I was wondering if, you have a relationship with a mortgage broker. And he said, well, actually, we are looking for someone on the buy-to-let side.
Ah, okay.
And that was my first in. So coming full circle back to your question, what's the hardest thing? It's the having no momentum and literally driving your business. And then you've got to nail it. So often when you start, you get the worst, you get kind of the scraps. So it's a client who's already been to 3 mortgage brokers. They've all failed for one reason or the other, and they're giving you a go. And it's they've either got adverse credit or it's quite complicated.
Sure.
And you've got to prove yourself in small moments to then, gain trust. So I would say that's...
I mean, you've got to show true grit.
Resilience.
Big time.
But to come into the industry, I think, or to be an entrepreneur, you have to.
You have to. It
has to excite you.
Yeah, otherwise, it's not the right career for you, is it?
100%.
Absolutely not.
You won't last.
I mean, looking at your firm now then, clearly one of the biggest things that stands you out is that you're very much in that development space, and bridging space has been your go-to. I know you've had some incredible deals in your first year as well. But what I'm interested in is, how do you work with your clients, like to give them a remarkable experience? Because obviously, like you said, there's lots of other people doing this, so you need to stand out. So what have you done with your clients to make a difference?
So I think the first thing was, I knew that I had a lack of experience compared to people who've been in the development space for 20, 30 years. The minute in our industry that you rest on your laurels, the minute you think something's not possible, someone will come in from the side and find a way to do it.
Yeah.
And so I was that person that was able to get things over the line that previously weren't or hadn't been possible. So use my naivety as a strength. I would ask all the silly questions, because sometimes there is movability in the simpleness of that. So first things first was kind of dogged in my approach, never taking no for an answer. Within that, I think having a background in trading, macroeconomics, has really differentiated the offering that we've been able to give to clients. Many of my clients now have tens, if not hundreds, of buy-to-lets. They have all of these mortgages coming off at different times. They should be thinking about it as if it's a stock portfolio. They're inherently short interest rates, they're long inflation. So if you can speak to how, let's say, Trump's import tariffs could affect inflation, interest rate expectations in their portfolio, you can differentiate your offering. So there's that, not taking no for an answer. And then we heavily invested as well, quite early on, in lender relationships. So every day for a year, I met with 2 specialist lenders.
Wow.
And really dug into what their criteria, what differentiates them, how are they funded, because that often filters into how they treat clients at the end of the day.
Yeah, I think there's also a level of respect that people forget in the brokerage world, where if you don't spend time with lenders and just throw them clients or introduce clients without really talking to them and them getting an understanding how you work, that's going to be counterproductive.
Totally.
Whereas a lot of brokers think, well, I'm giving them clients, so they should be happy.
They think that they're the client of the lender.
Yeah, exactly.
In reality, I think it's a far smarter approach to treat business as if you've got two clients. You have your, end user, the borrower, and the lender themselves.
Yeah.
People don't realise that BDMs, so let's say you have a firm that has 10 BDMs. There's a skill in knowing which of those BDMs has gravitas in the office. You could place the same deal with one BDM and versus another at the same firm. One of them will get it over the line.
Oh, wow.
And the other won't. Yeah.
Okay.
So, and knowing kind of how to navigate that is a skill in its own right.
So I should probably put a warning sign here for BDMs who might be meeting you in the future.
If I'm speaking to you, it's a good thing.
Don't make the grade. You're not getting that deal. I mean, looking at you got some really amazing case studies already. But is there a particular case study that you could share with our listeners today that might resonate with potentially other clients of yours that might come to you in the future?
Yeah, absolutely. I mean, this is what I love, the kind of negotiation side of things. So I could talk about two maybe that could be of interest. So I had a developer come to me who had exchanged on a plot of land before exchanging with their investor. And so unfortunately, after exchanging, putting a deposit down on land, their investor pulled out.
Right.
Once you exchange, you have, depending on the legal terms, 30 days with a mandatory notice period, maybe another 10 days, but 40 days to complete, or else you can lose potentially hundreds of thousands of pounds on, not completing.
Yeah.
So it came to me, no investor and no senior lender at that point because the investor had pulled out. And so I introduced them to an investor. Not only that, that particular investor had their cash already allocated to other opportunity sets. So I was able to look at the investor's portfolio, and where they had spare equity, we were able to cross-collateralize their assets. So that's a term that I would bring across from Goldman. Basically what it means is lenders typically will take a first charge on a development site, on a plot of land or an existing scheme. They'll take a first charge. But in addition to that, they could take a second or equitable charge. Equitable charge is even softer than a second legal, on a supplementary security, and in effect pull across that equity to stock up or top up the existing facility. So standardly, development lenders will lend, let's say, 70% loan to day one value on the land, and somewhere between 65 to 70% loan to GDV, gross development value. What's it going to be worth at the end?
Yeah.
So it doesn't quite work like this, but let's say you had 30% of the purchase price you need as cash. If you had that nominal amount as equity in another property, it's possible to pull that across without refinancing, without touching your existing first charge on that asset. So we did that, we cross-collateralized. What that meant was the developer had a 100% loan to cost solution. Mm-hmm. So they were fully funded, 100% of the purchase price, 100% of the development works. In some instances, we're able to extract the legal fees, the valuation fees. I mean, they literally have to put no cash in. And the investors were able to earn a return on equity, which would have otherwise just sat stagnant for 5 years. And we were able to complete within the 30 to 40 days.
Wow.
So it saved the deal. Now, more than that as well, that we had, so there's 4 SPVs involved, 4 limited companies involved, 4 directors involved. 3 of them were abroad. Now, many development lenders need wet signatures, so we were couriering documents over. At one point, I was nearly getting on a plane to New York.
Oh my gosh.
So, because I was like, we need to find a way to get, the quickest way is I'll just fly there in the morning, fly back, deliver the wet signature. Didn't need to in the end, luckily. So that was quite a complex, structured deal that I would refer to. And what's great about that is if you're any developer out there that has primary residence or they have other assets in the background that they don't want to touch their first charge, because maybe they're locked in at 2% and, the base rate's risen since then, we can sweat your equity whilst your cash is allocated somewhere else to make deals happen. And in the next 2 years, you can earn money on that equity.
I mean, also, if you're any client who's developing property, then I'd just say talk to you.
Please.
As well, do that.
I'd be happy to.
I mean, that must have taken you a while to get that deal over the line.
That took, we didn't have long. So
Good point.
I was able to turn around. So they approached me on the Thursday. By the Friday, we had a credit-backed terms subject to valuation. So, it was one of those all hands on deck, basically. Had to drill down, work through the night to get the terms back out by the Friday, valuation instructed. But there's another deal that could be of interest to to potential clients. which again, I find the structuring of it very, very interesting. So I had a client who had sourced a vacant care home.
Okay.
The care home had consent to extend 18 further bedrooms. So it's 36 bedrooms already, 18 more bedrooms. My clients were very confident that they would get consent to convert it back into two residential luxury dwelling houses. So the clever structuring of this was we decided to agree the purchase price in its current usage, so 1.5 million, exchange with a 5% deposit, which is 75 grand. Exchange and completion, we had a delayed period where we put in a planning application. Of course, you don't want to put the planning application in before you exchange because the vendor could pull out and then, the value of the asset potentially increases. So between the exchange and completion, they put in planning. Planning was passed. Now, the net effect of that is many people buy a property on a bridge, pay interest through the planning process.
Yes.
It costs them 1% a month. Councils can drag their heels a bit, as we all know. So effectively, they negotiated an interest-free bridge through the planning process by exchanging. I then sent the valuer into the site who said, well, in its current condition, with consent for residential development, it's worth 2 million, right? So the lender was able to lend against the open market value, which was 90% of the purchase price.
Nice.
Plus 100% of the development works. So on completion date, they'd already put 5% down. All they had to do was another 75 grand. GDV was £9 million. So to put 75 grand down for a scheme that we fully funded up to a GDV of 9 million.
I bet you had a very happy client.
That's a cracking deal. Yeah, and the lender too has used it as a case study of here's how you can use our financial products.
Yeah.
That's where the investment in lender relationships, knowing that particular lender could do that, has really paid off.
It comes back. And I mean, this is a great thing about what we can do to help advisors as well, because New Leaf is known for helping advisors set up in the commercial space, development space, giving you that opportunity to do this yourself, unlike having to use, say, expert third-party brokers or packages to help you finance the deal, which actually ends up you losing money and the client's paying more.
Absolutely. Yeah. And they often the packages, some packages, some, also brokers who are not, trained as if they're FCA regulated, which is what New Leaf does. Everything has to be packaged as if it were regulated. They just tend to place with relationships that they have rather than really pushing the needle, which we do at New Leaf.
That's great. So moving on to your development of this for your firm, you're obviously working on your own at the moment, but you're looking to potentially build the team or build your business.
That's right.
How does that look for you in the future?
So much deliberation, because, it's a trade-off between tech development and, certainly I think every small firm could benefit from administration support. So that was one of the first things that we did. Beyond that, you want other people to come alongside you and help drive the business, but build a culture, So at the moment, absolutely, I'm looking for talented individuals or people who are hardworking, want to push the needle on what is possible. I think in England, across the UK, we have a housing crisis.
Yes.
Rent is totally unaffordable for all of my friends and some family members. To be able to afford just to live in and around London or across the UK is difficult. We need to build houses. And I think development finance brokers, specialist brokers, can have a meaningful difference in getting loans over the line and not. And we need those schemes to get over the line. So what does it look like? I am meeting with, one of the things I've done is every lender that I've met with, I've asked them who's the best broker that they work with. So I know the names of everyone who's talented in the industry that lenders find particularly useful. And just seeing how our relationship evolves over time, meeting with them for coffee.
Build it organically.
Exactly.
Yeah, a bit like New Leaf then.
A bit like New Leaf. Yeah, absolutely.
What would your one piece of advice be to a new mortgage advisor coming into the space today?
Yes, so I think you need to roll your sleeves up. I think there's plenty of mortgage brokers in the industry. And so if you're going to gain any market share, you have to outwork other brokers. My whole philosophy is, first of all, taking 100% responsibility for every case. So through to fruition, through to legals. We're often getting involved in the conveyancing process. So I think you have to have that level of ownership to make a difference, differentiate yourself. But the key advice that I would give to anyone who, wants to potentially come in, do what we've done at Arose, I would say is fail faster. Okay. You can often sit with decision making and ponder on, should I or should I not do this? Should I, invest here, or should I try this approach? Try it, succeed or fail. If you're going to fail quicker, iterate quicker. So that's been, I think, a key to our success.
Brilliant. And the New Leaf podcast is all about turning over a new leaf of financial advice. So what we're asking everyone who joins our podcast is, what for you personally does that phrase mean in the context of your business journey? So what's the one new leaf you're currently looking to turn in your firm?
It's got to be scaling. It's got to be scaling, and scaling twofold. One is the team, kind of human capital, if we may phrase it that way. The other is technological investment. Mm-hmm. So we are, on the precipice of a wave of AI that I think will totally change our industry, and we are actively investing and looking into that.
Brilliant. And for our listeners today, listening to this podcast today, where's the best place to find out more about your firm?
Absolutely. So we're on LinkedIn. So Arose Finance is the name of the firm. Also, we are our website, arosefinance.co.uk.
Well, thanks for joining us on the podcast, Kelsey.
Thank you so much.